Hello again, everyone. This is Joe Hinches with Beyond the Chart, and this is technical analysis of the stock market today, weekend edition. Today is Saturday, August 9th, 2014. We're going to take a look at the markets like we typically do, the indicators, some ETFs, and then we're going to have a little bit of a history lesson. The markets in a moment in time, and we'll get into that in just a minute. Okay, so the Dow bounced 185 points yesterday, and part of this was because supposedly the Russians, the Russians have said, hey, we want to kind of mediate this, we want to step back. I haven't read all the details on it. It's what I've heard anyway, and the Russian stock market, I guess, went up 1.5% yesterday. And so, that kind of stimulated the buying kicking in the U.S. stock market. But we were ready for a bounce. When you look at this, we were getting some divergence in here. And we were definitely ready for a bounce. And the real question is, how much of a bounce are we going to get? And are we then going to pull all the way back up? Or, is this, all there is to the correction? I mean, who knows? I mean, it's really hard to tell at this point in time. I see one little wave and a little wave back up in here in this 3. Not sure if I could really count a wave in here. You might be able to do that. But it's a little iffy in me. So to me, we got to watch and see what we get. And let's look at some of the indicators too. Actually, what I want to do is I'm going to jump into the weekly and walk through the weekly really quick. I mean, it's just, you get one more bar, okay? So it just looks like a pause bar in here. And remember, we've still got these divergences, pretty significant divergence that we're fighting. So a little bit of a pause bar for the week here on the Dow Industrials. And the S&P 500, similar type thing. Now, the other thing that you're seeing, and let me go back to the Dow. Okay, see this little fishhook thing? Okay, on the RSI, and I've talked about this before. When you see the fishhook, it almost always means you're going to have a down bar for the next bar. So the real question is, if we're down, does it mean it's down a couple of points? Does it mean it's down, couple hundred points? Who knows? But if I had to bet, I'd bet that a week from now we're going to be sit back saying the Dow was down for the week. So it'll be interesting to watch and see. And the S&P is given the same type of signal. You got this little fish hook on the RSI that tells you that the next bar is most likely down. Okay, and Nasdaq weekly, same thing. Nasdaq's given the same reading. Let's see, again, just a little doji bar right in here at the 10-week moving average. New York Composite weekly. Now this one is a little more flatter in here. And it's doing the same type thing, a doji, but it's a little deeper down here by the 21-week moving average. And the Russell 2000, same kind of fishhook. And, it makes sense. You get this little pause, kind of little pause bar in here on a weekly basis. And right at the trend line again, right at this trend line on, and you get the DI minus above DI plus, telling you you're in negative mode. Right at this is the trend line on the Russell all the way, the 5-year trend line. Okay, so we're at the 5-year trend line on the Russell. And we're bounced off of that just a little bit this last week. All right, now we get back to the Dow, and we already looked at this, saw a little bit of the divergence. Let's take a look at the S&P 500 on the weekly. Same type of thing. You're seeing some divergence here. We're going to get a little bounce, at least in the first couple of days of the week. And it could be just nothing more than pulling back to this trend line on the S&P. Let's blow this. I mean, you see this trend line, and this is a trend line. Again, how long has it been in place for? Now, it's from November 2012. Okay, so 2.5 year on November 2012. It's not quite 2 years, but it's a pretty significant trend line. Okay, and the Nasdaq Composite. A little bit of sideways consolidation in here after this little move down. Not getting, we never got oversold. Remember, we talked about that before. We hadn't got oversold on the Nasdaq yet, so it's holding up fairly strong. And the Russell 2000. Russell 2000, this looks like a little bit of a counter trend type of flag type of deal. And, you know, when I say flag, let me get rid of this. It's because I'm doing this. It looks like a little bit of a flag, you know, and you got the flagpole here. It's upside down flag. So that's the kind of little formation it looks like, which begs that, you know, that it could, you know, break right on down to the next move. And let's see. The New York Composite was the other one I wanted to look at. There we go. And the New York, again, we're getting the same type of reading on here. The New York broke that trend line, but pulled right back. So, yeah, it's hard to tell. You know, it's hard to tell what we're getting other than the, you know, the bounce. Let's see where this trend line, you know, this is a fairly substantial. This is tying back in again. It's, you know, a November 2000. This is October 2011, so it's a little bit longer term trend line. And of course, this is the 5-year trend line in here on the New York Composite. All right, I think that does it for those. Now we want to take a look at the indicators and see how they're doing. The short-term trading index. We on Thursday we got a reading almost at 2, 1.99, and one of the, you know, you start getting above 2, a lot of times it's kind of a bottom reading. I mean, this one here was February 3rd at the bottom of that whole January sell-off. And you can look back and see some of the other corrections that we've had. You know, you get a reading that deep, and it's kind of a signal that it may be a pause. A lot of times you need a cluster, you know, of a couple of them. And of course, the 10 days pulled right back up higher, so it's really right in the middle between the red line and the green line I've got in here for the extreme readings. It's right in the middle. Neutral. Okay, and the VIX. This is the one that's interesting to me. It's still clustering and pausing in here. I don't think we've gotten a divergence reading yet that I'm looking for. I know we look like we've got it here on the DI plus. But I'm still looking for it on the RSI, and which would mean that, okay, maybe we pull back a little bit more, but then we make one more thrust up, so one more leg down. I don't know. We'll have to see. It's not, you know, it's just supposition on my part in terms of how that's might act. The high-low index is pulled back almost to the 0 line, -3. So basically the new highs and new lows basically offset each other on Friday. And let's see, I think that's it for the indicators. Let's take a look at some of the ETFs. The semiconductors pulling back over the last couple of days. Had that big down day on Thursday. In here, kind of went up and then reversed back down. We've got an inside pause bar here on Friday. But you can see short term, the 10's below the 21. Now you still got this pretty nicely increasing 55 above the 233. But when you start to get distance, that's the other thing, you know, and again, I don't have some scientific, but when you start to get the distance above the 233, and a lot of people use 200, that's fine. When you see this kind of air between that, a lot of times you know you're getting in that situation where it's going to correct, okay? When you start getting a lot of air above that moving average, so that's something that just visually you need to be aware of, you know, as you're looking. the Homebuilders ETF. The Homebuilders ETF, this really, okay, we talked about this wedge, and I said, wow, it's coming down fast. It'll go to the bottom of the wedge. We went to the bottom of the wedge. We went past the bottom of the wedge. So now I'm looking at the wave count in here, and I see, I mean, you could say that this looks like an A, kind of a complex A, pretty choppy. I don't know if there's 5 waves. My guess is that we got 5 waves in here, and then you get a B, and then, you know, C. Now, C in a zigzag, C is supposed to be 5 waves. Well, we've got, you know, you could almost say 1 here, and then this is a flat, kind of a running flat, 2, then 3 hard down, and then this little zigzag 4, okay? So I could see that maybe we have 1 more leg down here in the home builders for 5. So then the real question is this A, B, C, or is this 1, 2, 3, 4, 5 continuing down? That's what we just have to watch out for once we get this third wave completed, 5 waves down, because no matter what, you know, that last wave in the correction is going to be 5 waves. Okay, and then the last one we want to take a look at is the well, there's actually, I've got one more I wanted to look at too, but the financial ETF is probably right in front of my face. There it is. Okay, so it's broken this trend line, and this is the trend line back, I think, a year. It's a 1-year trend line on the red when it does that. Okay, now we've clustered right below that trend line, and we pulled right back up to it on Friday. So I'm looking at this as 1, 2, 3 waves. And so we're going to go sideways for a couple more days, or are we going to pop back up? You know, this 4 seems to be clustering below 1. We'll see if that's how that plays out or not. And let's see. I think, oh, the other one I wanted to take a look at is the high yield bond fund ETF, which is kind of interesting because this is a weekly. All right, so you can see that, okay, let me step back. So this is since the 2009. So this is the 5-year bull market in the stocks, and you can see how the high yield bond fund has done very, very well, and basically the risk appetite was great until May 2013. Then, you know, it sold off, but, you know, the market was selling off, that June sell-off. Well, okay, the markets continue to rally and rally to new highs. I mean, if you look at the Dow weekly, and where's May 2013? So right here. So here's what we've done since May 2013, and then here's what this has done in terms of the high yield fund. So that's kind of a signal also that we got a turn coming, I think. So we're getting divergence on the weekly on the Dow and the market all over. We're getting this kind of signal. It's breaking down potentially a head and shoulders top in here, possible neckline, you know, right in here. Okay, so we're getting some signals. It's like the market's trying to tell us ahead of time that, you know, look, watch out, you know, something may be coming. And I think that was it. And one last thing I wanted to take a look at was the just kind of a little note, since it's August, what happened August 2nd, 1990. All right. Okay, so here we are in July 1990. Stock market's moving up very nicely. Oh man, it's, you know, we're in a rally mode, both, everything's looking great, but we're getting divergence on the RSI, negative signal. Okay, so that tells you that there's something a little structurally weak in the move. Okay, and so then, you know, what happens? Iraq invades Kuwait on August 2nd, 1990. And you get the 10 break below 21, which it did back over here too, but you didn't have the dramatically weak RSI giving you the signal. This time you had it, then when it broke down, and then, well, Iraq invades Kuwait, this huge sell-off occurs. And then the other thing that's kind of interesting in here, let me see if I can. So you see the sell-off coming down, okay? And as it comes down, it formed this head and shoulders pattern right in here. And I'll go ahead and move this forward a little bit more rapidly. And then it formed a dramatic head and shoulders. This ended up being the head and shoulders in the head of a head and shoulders pattern in here that was very strong because you had a horizontal bar, okay, very strong. And so Desert Storm kicked off on January 17th, that day or the night before. I think that was a Wednesday night. And the markets all exploded, and it just, and look at the distance. If you measure this distance here, and then that's the projected move that had happened, and that it got that move pretty doggone quickly. Okay, so this is a classic head and shoulders bottom, classic that you had it in here, classic that, you know, the turn that came was somewhat being predicted by the weakness in the RSI. So that's our moment in time kind of history lesson, August 1990. All right, this has been Joe for Beyond the Chart. We'll be back tomorrow. I am going to go back to putting out the trade ideas on Sunday. I kind of like that because it allows me to spend a little time looking at the individual stocks a little bit more. So I'm going to do that. And so if you liked the video, felt like it helped you, please share it on social media. And if you're not a subscriber, just click on the little red box here and download the PDF and subscribe. All right, this is Joe for Beyond the Chart. We'll see you tomorrow on the next video.